We'll do this sum of Karen and Lee. It's May, June 2022 paper 22. Okay. Let's see. Read the question now. Before reading the question also, we will see what do they want us to prepare. So what do they want us to prepare?
Income statement.
Okay, first they want us to prepare income statement. After that, what do they want us to prepare?
Current account.
Is current account. So with the information that is given to us, they want us to prepare income statement and current account. Okay.
Yeah.
So let's start. Read the question.
Karen and Lee are in a partnership sharing profits and losses in the ratio 2:3 respectively. The following balances were available on 28th February 2022. Trial balance at 28th February 2022.
Okay, so now we
Administrative
have the
expenses.
1 minute wait. We have trial balance on 20th February 2022. What does this mean? That means my year is ending on what date? My year is
28th February
ending on
2022.
and I very clearly know that I have to prepare income statement and I have to prepare only one partner, that is Lee's current account. So while reading, we will try doing markings of our income statement. Yes. Okay. Administrative expenses. Where will this come?
Income statement.
Where? Other expenses?
Yeah.
So I write OE. Okay. Bank interest charges.
One. I'm in class. Bank. Yeah. Unblocked. Bank interest charges is in, I think it'll come in this now, income statement, other expenses.
It will come in income statement, other expenses. Bank overdraft.
Bank overdraft.
Is it a current liability?
Yeah.
Okay, so it is a current liability. It has nothing to do with my income statement. They wanted us to prepare two things. One is income statement and one is current account of Lee. So capital account, will it come in the current account or it will not come?
It will.
This is capital account. So when
No,
this
this will be capital account balance now.
so this will be a capital account balance. It has nothing to do with the current account. Are you with me?
Yeah.
Carriage inward.
Carriage inward is going to be income statement.
It will be added to purchases. Okay, fine. Now current account balance. So if I had to make Lee's current account, they want only Lee's current account.
Yeah.
They want only Lee's current account. So if I
Yeah,
am giving the current account balance, where will I put this?
Current account balance you will put now.
Current
Current account balance.
So
Credit
Karen
side,
has
no?
a credit. Karen has a credit balance. Can you see this?
Yeah.
But Lee has a debit balance.
So it will come current account debit.
And what will I write?
Balance.
Balance begin now. Okay.
Now drawings will come in this.
Where?
Appropriation account.
No. Appropriation account is paid. Interest on drawings. But if the
Sorry.
there, I don't want
Capital.
anything related to Karen. I don't want anything related to Karen. I want things that is related to Lee.
Okay.
Right? And in the capital account, you only write the opening capital and closing capital. Everything else will go in the current account. So drawings of Lee, can I say this will go to the current account?
Yeah.
So drawings of leave will go to the current account. So in the current, if you see, I am making the current account
Yeah,
simultaneously.
I can see. Miss, but won't it be interest on drawings?
No, interest on drawings will be given as a percentage, right?
Yeah.
Later on.
Hmm.
Right now, what information I have, I can only put this much.
Okay.
Yes. Now insurance.
Income statement.
Where in income statement?
Other expenses.
Other expenses. Okay. So I'm writing insurance, other expenses. Now what is this?
Inventory. Opening inventory now.
Where will this go?
Income statement, cost of sales.
Cost of sales. Very good. Loan from Lee.
Income statement.
Will loan be in income statement or interest on loan be in income statement?
Interest on loan. So will this go in current account?
This will go in the liabilities, non-current liabilities.
Oh, okay,
But
okay.
remember, this is a dangerous item. If no instructions are given, you still have to provide 6% interest on loan.
Okay, huh.
Okay, and the interest on loan will be going where?
Debit side of, sorry, credit side. No, non-current liability.
Interest on loan. I first full video I had focused on it. Interest on loan will
Interest
go
on
in
loan.
other expenses.
Yeah, income statement that I said before.
Other expenses. You did not say it before. Check the recording
Hmm.
later. Okay.
See,
Non-current
see.
asset at cost and the provision. This will go in the statement of financial position.
Yeah.
Now provision for doubtful debts.
This will be subtracted from the trade receivables now.
No, darling. We do not record provision for doubtful debts directly, right? If you remember,
Yeah.
we do old minus new.
Oh, yeah. But miss, but we
So
don't have to do this in. I have a question. We don't have to do this in partnership now.
we have to make what? Income
Income
statement.
statement.
So if we have to make income statement, that means I have to do a regular
Oh,
income.
yeah, income and other expenses. You're right.
We do
Huh.
old minus new. So this is
Hmm.
the old one. And then we say old minus new. If the answer is positive, then it is.
If the answer is positive, then it's an income, and if it's negative, it's a
If it's
loss.
positive, it will be recorded in other income. And if it is negative, it will be recorded as other expenses.
Hmm.
Yeah, do you remember this?
Yeah.
So old is 260.
Hmm.
Can we go and see if we have any information about new?
1 minute. Yeah, 310.
So the provision has been increased to 310. So old
Yeah.
is 260 and the new is 310. So
Hmm.
old minus new, the answer is negative.
Yeah, so it's a loss. Will go in
260
other
minus
expense.
310. So it is a loss for you, and this loss is of minus 50. So it will
Yeah.
be in other expenses. So this 260 I will not record anywhere.
Huh.
Rather, I will write increase in the provision of 50
Hmm.
and I will record it in other expenses.
Hmm.
Purchases.
Yeah.
Where will purchases go?
Cost of sales.
Cost of sales. Now there is returns. If you see, you have two returns, right? One is of the
Where
debit
to?
and one is in the credit.
Oh, yeah. Okay. Huh.
Purchase is debit. So purchase return will be on which side?
Credit side.
And the one that is on debit, it will be the
Sales return.
return. Okay. Then you have
So,
revenue.
revenue, that'll come in income statement. You minus it from sales return.
Okay. Then you have trade payables and trade receivables. Are you with me?
Yeah.
Okay, fine. Now after this, I will read the adjustments and see if there are some adjustments that I need to incorporate. Are you with me?
Yeah.
So this is the entire sum. 1 minute, I'll just flip. So we will see if there is any adjustments that I need to incorporate. Come on, let's see. First adjustment. Read.
On 28th February 2022, inventory had been valued at 21,220. This figure included some damaged items which
So
had
1 minute.
cost.
Hold on. You have closing inventory, right?
Hmm.
And this closing inventory was valued at how much?
21,220.
220. Okay, fine. This 21,220, what did it have?
It had some damaged items.
And this damaged items had cost how much?
1320.
So this we had some damaged items and these damaged items had cost how much?
1320.
Okay, it had a sales value of
2480.
okay. You could sell this at 2480 if it was repaired. The damaged items could be repaired at the cost of 1,300. So
Yeah.
you have some inventory which has a different valuation. Cost is 1320 and the net realizable value of this is how much? 2480.
Hmm.
But I could sell this at 2480. Net realizable value is what? The selling price, the realizable value minus the estimated selling costs.
Huh.
So what is the selling cost? I could sell it only if I did a repair of 1,300.
Huh.
So my net realizable value becomes how much?
2480 minus 1300, na?
1300. Yes. So the net realizable value is how much?
1 minute,
118.
I'm telling you. Huh.
Okay. So how do you get the net realizable value?
You minus the estimated selling price,
The
the
net
minus the this,
realizable value is the expected selling price minus the estimated
minus.
selling cost.
Huh.
Okay. So in this 21,220, you had a damage inventory whose cost is 1320.
Huh.
But you are valuing that inventory at how much?
121220.
1180, na?
Oh yeah, sorry, upper ka I didn't see 1180.
1180. So in this 21,220, something of 1320 you don't want because you are not going to value it at 1320.
Yeah,
Rather, you are going to value it at how much?
1180.
1180. I'm putting the video on pause. I want you to rethink on it and get back. So inventory is valued at how much? You can answer the
Lower,
question. Okay. Inventory is valued at
lower
cost,
the cost for NRV.
cost or NRV, whichever is lower.
Yeah.
Okay. Now you have inventory of 21,220. Yes.
Hmm.
This has some damage items of 1320.
Yeah.
That means damage item has to be removed from this inventory.
Yeah. So minus it.
So I am minusing it. So my normal inventory is now 21,220 minus 1320,
1320.
19,900, right?
Huh.
19,900 is my normal inventory.
Hmm.
So this is perfect. This is the closing stock of my normal inventory. I'm okay with it.
Hmm.
My problem is this damage inventory. I have to fix the valuation of this damage inventory. Right?
Okay.
This is the damage inventory and I have to fix the valuation of this damage inventory.
Hmm.
So this damage inventory can be valued at costs, or this damage inventory can be valued at net realizable value, whichever is lower.
Huh.
Are you with me?
Yeah.
What is the cost of this damage inventory?
The cost of the damage inventory is 1300.
Check properly.
1320.
What is the cost of this damage inventory?
1320.
So the cost of this damage inventory is 1320.
Huh.
What is the net realizable value of this damage inventory?
2480.
2480. From this 2480, what will you do?
You have to minus na 1300. Am I wrong?
No, what is 1300? Say na, it is okay even if it's on recording. What is 1300?
Repaired cost. The
Okay, the
repairing.
estimated selling costs.
Huh.
So what is the net realizable value?
Okay, I will tell you 1 minute. One 80.
1180. So that means there was this damage inventory which has to be valued at how much? Not 1320. It has to be valued at how much?
1180.
1180. Are you with me?
Yes.
So my total closing inventory was how much?
21220.
From that, I remove the damage inventory because I need to find a valuation for the damage inventory.
Hmm.
So I will remove the 1320 and I will put the proper valuation of the damage inventory. What is the proper valuation of the damage inventory?
Proper valuation of damage inventory.
We did na cost or NRV, whichever is lower.
Okay. So in both of these, the NRV is lower.
1180.
Yeah.
So in my total value of inventory that they've given me, I removed
Hmm.
the wrong valuation of damage inventory because it is not going to be valued at 1320.
Huh.
It is rather going to be valued at,
1180.
so I will remove 1320 and I will add 1180.
Yes.
So my closing inventory actual valuation will become how much? 21
Closing
to 20 minus
minus one.
1320 plus 1180.
Hmm.
21080. Take time and register it. It is confusing. Okay. Have closing inventory of 21 to 20. This is for sure.
Hmm.
This includes 1320, which is damaged. So I will remove 1320. Because it is
Huh.
damaged, I cannot value the inventory at this price. I have to decide the price.
Yeah.
So I will remove 1320 of the damage inventory and I will sit and see what would be the value of this damage inventory. Cost or NRV?
Hmm.
What is NRV? Net realizable value. When I say net realizable value, that means a realizable value. Realizable value means what? The selling value. Selling value minus the estimated selling costs.
Hmm.
So the estimated selling cost is 1300. So the valuation of the damage inventory has to happen. It is either cost or NRV, whichever is lower. So the damage inventory, which was 1320, the cost is 1320, but its estimated market value, the net realizable value, is 1180. So I will value
Right.
this inventory not at 1320, I will value it at 1180. So from the closing inventory of 21,220, I will remove what I don't want to value it at, and I will add the amount at which I want to value it at.
Understood.
Okay.
Yeah.
So the valuation of the closing inventory will be at how much?
At the lower cost, no? 28.
21,080.
Yeah.
Yeah. I hope you've done it. Otherwise, you can see the recording again.
Yeah,
So
I
the
will do, Miss. I'm
inventory
okay.
is
So,
at 21,080. Are you with
uh,
me?
yes.
Okay, so the closing inventory is valued at 21,080.
Zero. Uh,
Can we go to the other adjustments?
yes.
Let's go to the other adjustments. Come on. What is the next adjustment? Read.
In January 2022, an error had been made recording return
Return
inwards
inwards.
for
What is return inwards? Purchase return or sales return?
return inwards, sales return.
So you had done an error in recording the sales return. Okay? 410.
Okay, I understood this. Can I do this?
Can you tell me? Yeah, do it. Tell me. Do I
Yeah,
should
can you write
tell
wrong,
it?
reverse, correct, rectification?
No, no, you don't have to do so much.
Miss, let me do like that only, then I get
No,
confused.
no, I'll show you. Wait.
Hmm.
You had done an error in recording return inwards of 410. This
Hmm.
amount had been put to return outward account. That means you had a sales return. You had what?
Huh.
You had a sales return. But what did you do?
Sales return.
You recorded as purchase return. Understand and read properly.
Hmm.
You had what?
You
Read,
had
read.
a sales return.
Okay. And what did you do in error? What was your error?
You recorded the sales return as purchase return.
So sales return is treated as purchase return. So what will you do? So what will you do? You will remove it from the purchase return. That means this was not a purchase return.
Huh.
So you will remove it from the purchase return.
Huh.
You will remove it from the purchase return and you will add it to the sales return. Because this was actually a sales return, you treated it as purchase return.
Hmm.
Yeah? What was it? It was a
Yeah.
sales return. So you will add it to sales return. What did
Hmm.
you do? You treated it as purchase return. So you will remove it from the purchase return.
Okay.
Yes?
Hmm.
Next one. Read.
Insurance includes 1410 paid for 3 months ended 30th April 2022. Okay, 1410 divided by 3 we have to do first.
What is it?
Can you do please?
Do it, na?
Okay, I'm doing it.
So it is 470 per month.
Huh.
Okay. When is your year ending?
Yours is ending. Can you go upper, miss? I forgot.
20th February.
Yeah, so you paid extra
For how many months?
March, April for 2 months.
Extra is paid for 2 months. So you have
Yeah.
prepaid for 2 months. How
Huh.
much is the prepaid for 2 months?
470 into 2.
So it becomes how much? 940. So
Hmm.
how will you record this 940? You have,
You'll
you will minus it from the insurance.
Insurance, huh?
Minus 940 prepaid.
Hmm.
Yes?
Yeah.
Okay, fine. Next one. Read the fourth adjustment.
The loan from Lee had been arranged on November 1st, 2021. It was agreed that Lee should be entitled to interest at 6% per annum on the loan. No entries have been made for interest.
That
In
means you have to
class.
provide interest on loan.
I'm in class. Yeah. Huh.
Interest on loan. What is the loan amount?
Loan amount is. Can you go upper, miss? Thoda, I can't see. 10,000.
Loan amount is 10,000. So interest
Hmm.
on loan. So you have to
Hmm.
provide interest on loan. How much will be the interest on loan? It will be 10,000
6% ना उसका
into 6%. And when is the
तो 600 को
when is this taken?
November 2021.
So for how many months? November
November, December, January, February. 4 months.
into 4 by 12. So this will become how
Hmm.
much?
I'm doing. मैं 600 into 4.12 करना है ना.
10,000 into 6% into 4
Hmm.
divided by 12. So 200,
200 rupees. हाँ.
$200.
हाँ, sorry.
So interest on loan will come in other expenses as $200. Yeah.
Yeah.
Now this fifth adjustment we already dealt with. Now six. Depreciation.
Miss, do we have to do this?
What?
Do we? Oh, depreciation we have to do now because we have to do for this. Other
Depreciation is
expenses.
other expenses, right?
Yeah. So I'll tell you this I know. 56,000 minus
Cost is
provision for
160,000.
yeah, sorry, 160,000 minus 56,000 into 20%.
Hmm. 100 and
It's
2,000.
4,800. The answer is 4,800.
I am getting 20,800.
How?
100 and
160,000.
2,000 into 20%. So depreciation will be other expenses and it will be 20,800.
Hmm.
Yeah.
Yeah.
So depreciation other expenses 20,800. Now what we
Hmm.
have to do is we have to prepare the income statement.
Income statement.
Okay, fine. Let's start. So what is the first thing that we will record? Revenue.
Huh.
कितना है revenue? How much is
Revenue
it?
is
You can see the revenue over here.
yeah, I can 229,250.
229250 from
Hmm.
this revenue. Now I'm just cropping it because then I don't need it. Okay. From this revenue, what will you subtract?
Sales return.
Sales return. How much? How
Sales
much?
return कितना?
यहाँ पे है ना डेबिट रिटर्न we've
Two
written
2,200. Huh.
2200 plus how much? 410.
Yeah.
So 2200 plus 410. It is how much? 2610.
Yeah.
So this will become 226640.
Hmm.
Then what will you do? Cost of
Then,
sales.
yeah, cost of sales.
It is
Opening inventory, which is
add purchases.
minus closing.
There's also carriage inward, right?
Yeah, sorry, you have to add that to purchases.
Carriage inward less closing inventory.
Hmm.
Then what do you get? Gross profit.
Yep.
Then you will less what?
Other income.
Other expense. There is no other income.
Okay, yeah, so directly other expenses.
I just wrote the format and I am starting to write everything so that I just make the sum a little smaller. So start from the first
Okay.
line. What
Administrative expenses.
so I will write administrative expenses. How much? 6020.
6020.
Then
Yeah.
that is 180.
Huh?
Bank interest.
Huh?
Okay. Then there is carriage inward directly 3880.
Yeah, but that you have to add in purchases now.
So see where I have written.
Acha, okay, okay, acha, I thought you were writing in that. Then there'll be insurance.
Then I am just making this smaller.
Hmm. मैं split screen कर सकते हो.
नहीं ठीक है. I don't want to split the screen. Then there is insurance.
हाँ.
What will you do in insurance?
7740 minus 940.
So how much it is?
1 minute, I'm gonna tell you.
So it becomes 6,800.
Yeah.
You can either do over here and when you have place for workings provided. Can you see there is
You
place?
over all my workings will be over here only. I can do essay like how you did. Because in IGCSE has to do like on the paper only on the question.
And that is what I'm trying to tell you. When there is place for workings provided, 2, 3 workings you can do over here. Okay.
Okay.
So I will do working number 1, insurance. Okay. I will write it is 7740 less prepaid.
Hmm.
How did you get that prepaid? You can show it over here. So it becomes
Okay.
6,800. So then what do you do? Just 2 to 3 you can just do like this. And you will write
Okay.
working 1.
Oh,
So
so I can just write the final answer then.
yeah.
Okay.
It is just the calculation that we do, just give it a number.
Okay.
Okay. Then you have your opening inventory, how much?
Opening inventory is 8250.
8250. Then nothing is over here. You don't need anything from here.
Hmm.
Right?
Huh.
Was loan. Then I'm going to this additional information. Yeah?
Huh.
What is that additional information? I'm just putting over here. One is interest
Okay.
on loan.
Yeah.
Can I give it another working?
Yes.
And I will put 200. And this working for interest on loan, where will I do? I will put it over here.
Hmm.
Just working when they give you place, that means 2, 3 you can just show over here.
Oh.
So this will become working note 2.
Okay.
Then you have your closing inventory.
Hmm.
How much? 21080. See, it is adjustment number 1. Yeah,
Yeah.
21080. I'm just putting over here in brackets.
Hmm.
Then your returns. Now you see You have something that was related to returns. That means purchases has to be adjusted with purchase return. Yeah?
Yeah. Yeah. So that also working करके कर दूँ?
हाँ, इसको वर्किंग नोट नंबर 3 दे दो क्लोजिंग इन्वेंट्री को. Working note number 3 for closing inventory. You can write that.
Yeah.
And working note number 4, because you forgot na purchases.
Yup.
So your purchases was how much?
Purchases was 1 minute.
1 4
Five
purchases.
one.
So purchases is 151440 less returns.
Oh.
So it is 3930 minus 410. So what is the final returns?
1 minute.
3930 minus 410. So it is 3520. So your net purchases is coming up to how much?